On to another CNBC TV80 exclusive. Sources tell us that public sector banks are planning to write to the Finance Ministry on cross-selling commissions. Yash Jain joins us with the details. Yash, what are the concerns that the public sector banks are likely to raise in the days to come?
Before I get to the latest development, let me just put a few things in context. So what is cross-selling of products? Essentially what that means is that any employee of a particular bank is selling the products of the bank's subsidiaries. For example, a State Bank of India employee selling mutual fund products of SBI Mutual Fund or life and general insurance products of SBI Life and SBI General. Now, what we were given to understand also, this came a couple of weeks ago, is that Finance Ministry had expressed concern with respect to mis-selling of these products and asked PSU banks to stop paying commission to their employees for cross-selling of products. Now, what we're given to understand is that these PSU banks, be it Punjab National Bank, State Bank of India, Bank of Baroda, are planning to write to the Finance Ministry to defend the cross-selling medium or the bank assurance medium, saying that these lines of business are very important for the subsidiary for distributing their products, be it the life general insurance business or the mutual fund business. What they're essentially trying to protect the ground, they're saying that, you know, even though the product is being sold by the employee of the bank, there is a lot of due diligence which happens on the subsidiaries end, which is the mutual fund or the insurance company, where they do a need analysis and various other things to make sure that the customer knows about what he's buying, so there is no sort of cross mis-selling which happens from the banks. Also, what they're saying is that the government needs to make a clear differentiation when it comes to banks which are performing as far as their core banking operations are concerned and the banks which are not, and then accordingly put restriction when it comes to cross-selling. But yes, it is a very big overhang, because if you just look at some of the businesses, PNB MetLife, the life insurance company, gets 52% of its business through bank assurance. IDBI Federal Life gets 80%. SBI Life 60%. India First, which has Bank of Baroda as its partner, gets 85 to 90%. So it is a big overhang, and we'll have to see how the Finance Ministry really assesses the response from these PSU banks.